It's the beginning of the month, and that means it is time for your piping hot monthly Bitcoin digest. And today I'm going to focus on a topic that is probably catered a little bit to those of you who might be newer to Bitcoin, or the many of you who no doubt have folks in your lives who are newer to Bitcoin. And it is posing this question of what is going on, right? We had the halving, we had all the ETF hype earlier in the year, and now we're not only stagnating in terms of the fiat exchange rate of Bitcoin, but we're back down in the 50Ks. Gasp. What is going on? For those of you that have watched this channel for some time, you know that I am not overly fixated, nor do I necessarily care all that much about the fiat exchange rate of Bitcoin per se. But I do think that it is important, particularly for those that might be newer to Bitcoin, to understand what is happening under the hood and to understand some of the market dynamics, because that really is part of what helps build conviction. So what in the heck is going on with Bitcoin? Today we discuss. Let's jump in. This video is made possible by Bitcoin Trading Cards, and I am pumped to have them as the first sponsor on my channel. I met Aladdin and the team back at Pacific Bitcoin 2022, and I'm not going to lie, at the time I thought, okay, cool, a quirky little Bitcoin project, but little could I have imagined at the time how this project would capture imaginations. I've personally used these to orange pill people that I care about in my life. The art is stunning and features Bitcoin artists all around the world. You get high quality Bitcoin education on topics like economics and freedom as part of that, which makes this, as you can imagine, a really special project for me. And I'm not gonna lie, it makes you want to collect these. The community behind this is also truly insane. And I think they have a real shot at bringing Bitcoin to the mainstream. So if you're curious to check them out, head over to btc-tc.com where you can find the different series they've launched. And hey, if you do end up snagging some cards, you'll also get some Bitcoin rewards back on your purchase, powered by Jolts. Here's to ripping packs and stacking sats. For those of you that want to get in touch with me for one-on-one consulting, mentorship, I'm now working with a number of clients across all sorts of topics, whether it's taking self-custody, running a node, privacy best practices, and more. You can reach out to me at vida.io/IanMajor. Okay, so we find ourselves in this sort of summertime sideways malaise, right? We saw the huge run-up in price, driven in large part by the ETF inflows earlier this year. And then we now have had quite a few months of sort of sideways chop in the 60 to 70K range. And as of the making of this video, today is July 4th. Happy Independence Day to those that are celebrating, and happy financial independence to all of you freedom enthusiasts around the world. But we have now broken into, 59, 58, 57. Where will it go from here? And so a lot of people that maybe were newer to Bitcoin, that maybe came in initially through some of the ETF stuff, who were, looking to kind of learn more, a lot of them are deer in the headlights, right? Those of us that have been around for some time know that this is really nothing even remotely out of the ordinary. But you have to kind of put yourself back in your shoes when you first got into this space. I remember when I, early on was freaking out over did I get this all wrong? And so I think we can be sympathetic and empathetic to that. And so let's bring some context to what is happening, right? Because I think in many ways people, especially those newer to Bitcoin, were kind of faked out with this huge run up in price that we had driven by the ETF inflows. And then, whoa, with the halving right there coming soon on its heels, we're just going to go straight to Valhalla. Like, this is just going to be a straight line up and to the right. But in fact, that has never been the case, right? And while the ETF inflows were unique in elevating people's expectations on a relative basis compared to historical cycles, the price of Bitcoin heading into this most recent halving was certainly a lot more elevated. So I think that kind of threw a head fake for a lot of people. But it has never been the case that, the fiat exchange rate of Bitcoin starts to rip immediately post halving. Why? One huge reason is that you need to cull the miners and hashers that are no longer profitable and that are kind of carrying on, hanging on, trying to kind of squeeze a bit of productivity out of their remaining capital expenditures that they would have invested, however long ago. Because think about it, a miner typically is going to have their input costs, i.e. their electricity, utilities, these things, that they have to pay in fiat. So they're going to have to sell Bitcoin. And now they're having to sell at a much faster rate, at least some of them, because they are now earning much less with the halving. And so we can see that clearing of this dead debris very nicely depicted here. So this is looking at hash rate drawdowns. So basically the percentage decline or percentage drawdown relative to a high of hash rate. And you can essentially see that the current one down to the tune of, between 7-8%, that's big. That is a big drawdown, historically speaking, when it comes to hash rate. And you can see that that is comparable to the market bottom after FTX. And again, there's other dynamics as well, right? Miners might be, for example, taking some of their machines, some of their less efficient machines offline and swapping in higher efficiency models that hopefully they would have bought at favorable prices during the bear market. But that transition is costly, right? And so for a variety of reasons, miners are selling at an elevated rate immediately following a halving. I think that is the main takeaway. So that's a huge factor in all of this, and it's also a very fundamental factor that is important to understand, right? This will always be the case. It will always be the case that you will have some culling of miners immediately post-halving that leads to, at best, flat price movement. The order of operations has that happening first, and only later the relative, supply tightness kick in. It takes a long time for that to flow through. So miner selling has been a humongous factor in why price is doing what it's doing. And this is to be expected. In addition to that, you have other factors as well. We've seen all the headlines now around Mt. Gox, which is preparing to finally, after a decade, distribute the 9 billion, I think it's 140,000 Bitcoin or so, to customers impacted by that bankruptcy. We've seen the very first, what appear to be test payments. Now, I think we're far from a conclusion on what impact this is going to have. I mean, a lot of people would intuitively think, oh my gosh, okay, more downside is to come. I think that's probably true. Again, on the one hand, 140,000 Bitcoin, I mean, that's a good chunk of Bitcoin. These people have been, waiting for this for 10 years. On the other hand, they've been waiting for this for 10 years. So it's kind of like, will some of them continue to hodl and sell an inferior asset that they would also be getting, which is, Bitcoin Cash, right? Which forked well after, the Mt. Gox debacle. Even if we do assume that pretty much everyone sells, 9 billion, again, it's a lot of money, but the daily trading volume for Bitcoin is what, 30, 40 billion. Obviously not all, right? Like the 9 billion would be all sell side. So I'm not saying that doesn't move the price. It obviously will and does. But all I'm trying to say is it remains very much to be seen just how much this will impact price further. And frankly, I just think either way, it's good to get this. This has been hanging over people's heads. And something that the market has been worried about for years and years and years now. So I think it's good that we're getting it out of the way and moving on, without this hanging over everyone's heads. Last thing I'll say here is trade these events and some of the ones that we will talk about here shortly as well. Like, trade these events at your own peril. Bitcoin is a highly adversarial market. People get absolutely wrecked all the time. You have liquidations in either direction all the time. I personally think you're crazy if you think you can trade these events. But you are a free individual, so do as you will. But, right, I've learned from personal experience in the past, you try to get cheeky, it tends to burn you. So again, just my 2 cents there. Meanwhile, we've also seen these headlines of the US and German governments in particular that have sent close to $1 billion in Bitcoin to exchanges over the last 2 weeks. Why that's happening now is anyone's guess. And indeed, there could be any number of explanations on the table. Nothing is too insane. They could be trying to spook markets. They could be trying to, let their insiders get in at a lower price. All of it, any of it's possible. Again, though, in the grand scheme of things, not a whole lot. Yes, having an impact here in the short run. What I think people fail to kind of comprehend time and time again is that Bitcoin is an absolutely finite asset. It does not matter. That supply will get gobbled up over a sufficiently long period of time unless something were to fundamentally change with respect to the value that people clearly get out of Bitcoin for a whole variety of reasons. And for that, you basically have to assume that governments stop being governments. I will let you make your own judgment as to how likely that would be. So taking a step back, that's a good amount of headwinds, right? And yet, here we are, kind of hanging out in the mid to high 50Ks, probably about 20% or so off the all-time high. I mean, guys, that is, nothing to see here. We've seen multiple 30% plus drawdowns in past bull markets. And again, I think we're in inning 0, basically, of the current one. It really hasn't started yet, even though people have been led to believe that it has based on the early price action this year from the ETFs. But we're in inning 1 at best for how this typically goes. And Darren Feinstein also put out this great tweet today with some excellent perspective. He says, going back, he goes back to 2013. He entered in that email confirmation code to sign up with Mt. Gox, talking about all these exchanges that have come and gone over the years back then. And price of Bitcoin was $68 when he was signing up. It's just crazy, crazy, crazy how far we've come since those days. And so look to some of the OGs like Darren for some of that critical historical perspective, because what we're seeing now, and again, if many of you watching this know this already, but for those that are newer and for those that who might have gotten in recently and are now looking every day at the price, what's going on? Have I made a terrible mistake? The answer is an emphatic no. Now, additionally, what we've covered so far, I think, are the obvious and sort of easy things to point to as explanations for why the price is doing what it's doing. But as is almost always the case, there is typically something much bigger and much deeper that is actually driving the market. And I would argue what I'm about to explain is probably the dominant factor over everything we've already discussed. So it's important to understand that there's layers to this, right? There's kind of the macro layer, liquidity, global money liquidity. This is probably the Godzilla impact to Bitcoin. You look at its correlation with liquidity cycles, it's basically perfect. So you could have all these kind of micro examples that are either good or bad. And if the bigger macro picture is going the opposite way to that, it doesn't really matter what those little micro factors are doing. So what is that macro factor now? Bitcoin has been a pretty reliable early fire alarm for flagging when things are breaking in the global economy and financial system. What is that this time? Well, we've seen it recently. It's the Japanese yen. George Gammon just did a great video on this on his YouTube channel where he shows this picture. This is so fascinating. And for those of you that have, followed the works of Luke Grahman and others, this will not be surprising to you at all. But what he is showing here, this is actually from a single day. This is like a meme stock, but it's supposedly the most stable, treasury, major currency pair. These things should not move like what you're seeing. This is from a single day. I think it was July 1st. And what you're seeing is basically a perfect copy of one to the other. On the left-hand side, you have US 10-year treasury yield in a single day, mind you, going from, 4.39 all the way up to 4.48, about 10 basis points. Again, that move in a single day is pretty crazy. You don't often see that. And then meanwhile, the number of Japanese yen required to buy one US dollar is similarly going up, meaning the Japanese yen is getting less valuable relative to the dollar. So what in the heck is going on? So George in that video describes it very well. I would encourage you to check that out for kind of all the gory detail. I would encourage you to follow the work of Luke Grauman, who has been talking about this dynamic for a long time before basically anyone that I've seen. So what's happening is the Japanese economy is not doing great for a whole variety of reasons that would take many videos to fully outline. But suffice it to say that because of that, its currency, the Japanese yen, has been under real pressure. If we look at that exchange rate over the last 5 years, you can see that this is basically straight down, which is truly crazy. Particularly as the Japanese yen is one of the major fiat currencies used in the global financial system. And so the Japanese yen is getting less and less valuable relative to the dollar. And Japan, like many nations, needs to import energy, whether it's oil or whatever the case may be. Guess what they have to pay for that energy? Energy still, for the most part, is priced in dollars. If you're a nation and you have to pay with something that is getting more valuable versus the thing that you have that you can print, right? You can't just sort of print yen to buy dollars to buy your oil. You're only going to spiral this more out of control and you're going to have a currency collapse. But guess what? Japan holds an absolute war chest full of US treasuries, dollar denominated assets that they can sell to raise dollars to meet their needs as a nation. Energy, guess what, is the root of all things in your entire life. It is the most essential thing. Now, you may say, well, like, why would this be a big issue? Okay, like Japan is not in a great place economically. Their currency's under a lot of pressure. They're selling some of their dollar-denominated assets to raise dollars to fill in the gap. Like, what's the big deal? Well, the big deal is that the treasury market, which is supposed to be this biggest, most liquid market on earth, is responding quite violently to that activity. So this underscores that there is something amiss with supply and demand for the treasury market. And for those of us that have been paying any semblance of attention, it's pretty clear what that is, right? There is not enough demand for US treasuries, or even if the demand for US treasuries stays constant and you have, the Japanese, and the Japanese are not the only ones. They're certainly the most notable ones for whom this is happening currently. You add sell pressure to that, the price of treasuries is going to go down. Yields are inverse to price of bonds, so the yields go up. And with federal interest payments that are already in excess of defense spending in the US, this is a fiscal nightmare. So Japanese yen weakness places more sell pressure on treasuries, which places upward pressure on yields, which makes it more expensive for the US government to finance itself amidst what is already a rapidly deteriorating fiscal situation. And so the market is looking at that saying, holy smokes, right? US treasuries are the collateral that underpin the entire financial system. So if that collateral is now so volatile and has these risks attached to it, that propagates to everything else out there. So I have a hunch that what we're seeing, sure, miners, Mt. Gox, US, Germany, selling Bitcoin, all of that is definitely contributing, make no mistake. You've seen a bunch of liquidations of derivatives traders. All of that plays a role. But I think the bigger factor that's lurking out there is what's happening right now with the Japanese yen. And so where do we go from here? I think the rest of this summer could well be at least sideways, maybe chaotic, maybe we go even lower. So brace yourself for everything. But make no mistake, no matter how this goes, more dollar liquidity is going to be needed to patch up the holes of this system, especially in a US election year that is going to be hotly contested. And furthermore, we already anyways see early signs of the liquidity cycle turning to the upside. We can see this chart that has been going around showing the year-on-year change for M2. Again, not a perfect sort of metric, but is pretty good. And notably, a lot of people forget that it was negative for the first time since the Great Depression over the course of 2022, 2023-ish, and it is now flipped back positive. So I think we're going to run it back hot, but it might be some time, and this would anyways align with historical cycle timing. It's typically in the fall that we start to see some life again. And only into next year do I think we will really see the explosive upward price movement. So long story short, there's a lot of factors at play here, but I hope this at least helps identify some of what is going on. So buckle up for a bumpy ride, but it never is anything other than that. And if you're newer to Bitcoin, I welcome you. You're earning your stripes as we speak. But I'm curious to hear, what are your thoughts on any of the topics we discussed today? Are there other factors that you think are in play? Let me know in the comments down below. But I hope you found this valuable and insightful. If you did, you already know what to do. Give this video a like. Use the share feature underneath this video. That really does help get this to a broader audience. And if you were so enamored with this content, you want to donate to a pleb, which really does help me continue to make these videos, you can do so in a number of ways. There's the YouTube Super Thanks feature built directly into YouTube, or you can zip some sats my way over the Lightning Network to my Lightning address, ragermajor@getalby.com. For now, we'll go ahead and leave this here. As a reminder, every sat counts. And until next time, my friends, I'll see you then.